I think the markets are setting up for a decline. The Dow down about 230 points today. But despite that big jump in Microsoft, you have the decline in the Dow. The financials, again, are leading the way lower, which is not a healthy sign for the market or the economy, given that we are basically a credit based bubble economy.
In a recent podcast episode, renowned Gold Bug Peter Schiff delved into the topic of companies going public despite being in the red, as well as the significance of a robust stock market in light of a weak economy. Schiff emphasized that the real issue lies not in the lack of a higher debt ceiling, but in the perpetual increase in spending and debt. The United States regional banking crisis in March had First Republic at its core, resulting in a significant loss of value for its shares. First Republic shares have plummeted by 95% since the onset of the crisis. Peter reports that the regional bank index has reached a new low for the past 52 weeks, decreasing by 40% from its previous high. Republic Bank seems to be at the center of the crisis as it plunges by 97% from its peak. The situation has resulted in regional banks struggling to compete, customers withdrawing funds, and the stock market facing risks. Therefore, the banking crisis is far from over. Don't forget to subscribe to our channel and hit the bell icon to stay up to date with our latest updates.
Regional bank index hit a new 52-week low today, although it did manage to close positive, maybe about a 0.5% or so. I wouldn't get excited about that. It's not any kind of significant reversal. The trend is clearly down for these regional banks. The index is now down about 40% off its highs. Also, significantly, you had Republic Bank, which is now kind of the epicenter of the crisis. That bank was down another 30% today, just one day, to a new 52-week low. And it was lower on the day. At one point, it was down maybe 40%. But so it closed down 30%. That's a 97% decline from its 52-week high. So, I mean, you've practically lost all your money, right? I mean, you only have another 3% to go. Of course, if you bought it here, if you buy the stock now and it loses that last 3%, meaning it goes to zero, you don't lose 3%, you lose 100%. That's why it's still very dangerous to buy, these stocks that have blown up. There's a reason this stock went from, 100 and whatever down to 4. Things are pretty bad when that happens, and it very easily could complete the journey down to zero. That's why I have been avoiding the banks, because I saw this train wreck coming from a mile away. And these regional banks are in the most trouble because, as I said, they're seeing a withdrawal of capital, cash. Customers are taking their money out because they don't want to take chances that if their bank fails, it doesn't get a special bailout because it's not politically connected enough or big enough. So people are yanking their money out to play it safe and to put it into these bigger banks. And they want to get interest. These regional banks can't pay enough interest. They can't even compete with the U.S. government interest on treasuries. So they're in a lot of trouble. Their loans are going bad. Their collateral is going down. These are horrible businesses. And the fact that they're falling, again, is a bad sign. So I think we are setting ourselves up for a drop in the stock market.
According to Peter, gold is currently significantly undervalued. He suggests that investing in gold can be profitable and help preserve wealth, as he believes it will need to be repriced higher to reflect the reality of much higher inflation. When investors come to terms with this reality, Peter expects that the price of gold will rise significantly. He believes that a gold bull market is brewing and that the precious metal could reach even higher prices than it did in the past. This is fueled by the recent breakout that caused gold prices to surpass the $2,000 mark.
And I expect to see a break in the market. On the flip side, I think gold's going to go the other way. Gold closed below 2,000 today. I mean, still above 1990. They can't knock it down. The gold stocks are in a bit of a correction, and maybe the correction will get a little bit bigger. I mean, I bought a little bit more gold stocks myself. I'm very selective now. So if some stocks have corrected a little bit more, I'll buy them. And I'm hoping that we actually get a bigger pullback. I just don't think we're going to get that big a pullback. I think we'll get one. And, I'm always hoping that gold stocks go down. People are, why do you want them to go down? You own them. Yeah, I want to buy more. I mean, I'm not even close to wanting to sell. See, the only time the price of the stock matters is when you buy and when you sell. Everything else is a bunch of noise, right? In the meantime, between the buy and the sell, all that counts is your dividends, how much you're earning in dividends. But I know that gold stocks are going to be much higher in the future than they are right now.
Back in January, the U.S. government hit the debt ceiling, which led to yet another debt ceiling dispute. It has been 3 months, and Congress is yet to reach an agreement on how to raise the borrowing limit. In just the first 6 months of fiscal year 2023, the Biden administration recorded a $1.1 trillion budget deficit due to excessive spending. This trend is pushing the government towards a crisis point where it won't be able to fund spending using extraordinary measures. However, Republicans in Congress want to attach certain conditions to the new debt ceiling, while Democrats are pushing for a clean bill to raise the spending limit. Peter posted a tweet, Peter Schiff. A higher debt ceiling won't solve the problem. It will make the problem worse.
The Republicans actually passed a bill to raise the debt ceiling. They're going to raise it by $1.5 trillion, which is nothing. I mean, maybe that'll buy them 6 months, right? I mean, because the deficits are over $2 trillion a year. So raising it by $1.5 trillion, they were doing that, years and years ago when we only had $400 or $500 billion deficits a year. When you're running deficits of over $2 trillion a year, a $1.5 trillion increase in the debt limit doesn't really get you much. Now, personally, I would just assume the debt limit not go up. I want the ceiling left so that we could really start dealing with the debt and paying our bills instead of, putting more of our unpaid bills on a credit card. Well, the Republicans have passed a debt ceiling increase, but the Democrats in the Senate are not going to pass it. And even if the democratically controlled U.S. Senate passed it, Biden ain't going to sign it, right? So it's dead on arrival. And the reason that the Democrats don't want to sign it is because they say it's heartless. They're slashing government spending. This is terrible, right? The Republicans are punishing America with this increase. We want to just increase the debt ceiling, just a clean bill to increase the debt ceiling, as if that doesn't punish Americans. Who does Biden and the Democrats, who do they think is responsible for repaying all this debt? It's not like Americans avoid being punished if we don't make them pay now, if we let them pay later, because they're going to pay more later. Increasing the debt punishes the American people who are on the hook for repaying that debt. So if we really want to do the American people a solid, we should not raise the debt ceiling. We should reduce the burden of debt that we are placing on them. But
the fragility of our credit-based bubble economy has been exposed with the financials crumbling. Peter Schiff recommends reducing debt and investing in precious metals as a way of mitigating the situation. He predicts that the economy will deteriorate considerably throughout 2023 and 2024. Can gold finally clear $2,000 and leave it in the dust? To wrap up our discussion today, we invite you to leave your thoughts in the comments section. If you found this content useful, please show your support by giving it a thumbs up and subscribing to our channel for the latest news and videos. Your feedback is valuable to us, and we hope to hear from you again soon.